not sure exactly who said it, but somebody once said, "It ain't over till it's over," and the same is true with Peachtree. We have a few loose ends that we need to tie up. First of all, I want to discuss in this chapter a couple of types of transactions that we haven't specifically talked about before. We know the basics, but I want to point out just a few specific things. We also need to learn how to finish doing our banking. How do we reconcile a bank account? Then we need to use something called the year-end wizard. This is how we're going to close out the books. Takes us through all of the processes and makes sure everything is buttoned up correctly. Part of that process is also learning how to do a backup and restore. Now, backup and restore is not something we should only be doing at year-end, but we'll discuss all of that as we get through it. Lastly, you might want to do security. We aren't going to specifically talk about security in this chapter, but I have included a handout, if you will, in your project files folder that talks specifically about how to use users and how to add security to your file. So if you're ready to learn how to button up Peachtree at the end of the year and to make everything safe and secure, then let's go ahead and get started. We've learned an awful lot about Peachtree, but one thing that's important to remember is that there are other types of accounts in addition to just income, expenses, and payroll. Now, sometimes in a smaller company, those are the only things you're going to worry about. But to actually have an accurate picture of what the value of your company is, you have to worry also about assets, liabilities, and equity. They complete the financial picture. These really don't affect the P&L or the income statement, but it does affect the balance sheet. In order to use this correctly, or when it is used correctly, it properly reflects the values held by the business. How much is this business actually worth? Well, believe it or not, it is more than just what's sitting in a bank account. Assets can be added to the value and liabilities can be subtracted. Equity is the result. Now, we could get into a very deep and long discussion about all of the different intricacies of these accounts, and we're not going to do that here. Just remember that we already know about income, expenses, and payroll. We also know about general ledger entries. This is just another type of general ledger entry that you may need to be making in order to have an accurate picture. Basically, with assets, if you have something that's pretty cheap or inexpensive, you're just going to expense it out. For example, when you buy a pencil, you're not going to amortize how much that pencil is worth over the course of the 3 months that you use it. That would be kind of silly. But it is a good idea when you have larger purchases. Sometimes people think, well, I just bought $5,000 worth of computer equipment. I should just write all of that off, and that way it makes me look like I don't have to pay quite as many taxes. But there are some issues with that. It does greatly reduce your profit for that period, but then that's also the negative. It also greatly reduces your profit for that period. And so if you make inconsistent purchases, it can make your income look like it goes up and down, and that's not good. People like to see steady income. Also, once it's written off, it doesn't show any value to the company. So if you have $5,000 worth of computer equipment and you expense it out in January of one year, after January, and certainly after that year, it doesn't show that you have any value, even though that computer is still sitting on a desk and probably has value for another 3 or 4 years. We always want our profitability to look consistent, and that's why we don't always want to simply expense everything. It's better to add the value to your asset account and then write off, aka depreciate the cost over several years. That's going to help everything look better, as well as adding value to your company. The opposite is actually true for liabilities, or maybe I should say it's the same. It's similar yet different. Sometimes a liability needs to be entered differently as well. What if you took out a 10-year lease on office space? The total cost is $1,200 a month for 120 months, or $144,000. If you only entered that rent each month as it's paid, like a regular expense, then it won't show any real obligation on the part of the company. And so it may look like you have a lot of money in your account, but you still may be in debt $144,000. If you enter all of that $144,000 as a one-time expense, that's not accurate either. So again, we'll enter this one as a long-term liability and then offset the payments as they're made. Sometimes people like to do things one way or the other, thinking it's going to save them on taxes or make them look a little bit better at a given time. But really, working with assets and liabilities the correct way is going to be better off in the long run and more accurate. All of this accuracy becomes important because a balance sheet is good as of the end of the last fiscal year. In order to do that, you need to close the books. In accounting, nothing is closed until the books are closed. This is simply the process of making sure that all of your accounts are fully processed and balanced. Once they're closed, no changes should be made to those transactions. Now, normally I should say no changes can be made, but that's not true. You actually could, if you were the right person, go back and make some changes, but we don't want you to know that. Just think of it this way. Once it's closed, it's closed. You're going to make sure everything is balanced, and there's no reason to go back and make a change. This is generally done at the end of the fiscal year. There's a lot to know about preparing to close the books, and we're not going to try to give you all of those things. That's again where a bookkeeper and/or an accountant can help you. But basically, you want to make sure all of your payments and receipts are processed, and that you cancel any old outstanding purchase orders or sales orders that are still open, but that you know that aren't going to be actually fulfilled. You want to mark any accounts inactive if that's appropriate. You're going to make sure all of your bank accounts are reconciled, ensure all of your assets and liabilities and their related depreciation is correctly entered and up to date, prepare all of your necessary forms. That includes internal forms, employment forms, and tax forms. Then you can close the period, and then you can back up the file and purge the file. That will make sure that Peachtree stays in good working order and that you actually are on top of everything and know that as of that date, everything is buttoned up and tied up.